Welcome. Today we're diving into the fascinating world of Gann's Square of 9 roadmap chart. This legendary tool has intrigued traders and analysts for decades, offering a unique way to visualize price and time relationships in the market. We'll break down how the Square of 9 works, why it's so powerful, and how you can start applying its principles to your own charts. Whether you're new to technical analysis or looking to deepen your understanding, this journey will reveal the logic and practical steps behind Gann's mysterious methods. Let's begin by understanding what the Square of 9 actually is and why it matters. Square of 9 is a spiral chart developed by Gann, designed to map out price and time in a geometric fashion. Imagine a square grid where numbers spiral outward from the center, each representing a price or time value. This arrangement allows traders to identify key angles and relationships that often correspond to market turning points. The Square of 9 is especially valued for its ability to forecast support and resistance levels, as well as timing for potential reversal. Understanding this chart is the first step toward unlocking its predictive power. Put theory into practice. Let's construct a Square of 9 roadmap chart. We'll use a real-world example, the daily high-low bars of the S&P 500 SPX, from November 2002 to May 2003. The key low occurred on March 12, 2003 at 788.9. By plotting this on a simple price chart printed from Excel or any charting software, you can follow along and see how the Square of 9 overlays onto real price action. This hands-on approach brings Gann's concepts to life, making them accessible and actionable. You don't need fancy software to get started with the Square of 9 roadmap chart. A printed price chart, a pencil, and a straight edge are all you need. While many illustrations in Gann's books were created with custom software, the core principles can be applied manually. This simplicity is part of the Square of 9's enduring appeal. With a bit of practice, anyone can create a useful roadmap chart and start identifying key levels and trends. First step in constructing your roadmap chart is to calculate the horizontal grid lines. These lines represent key price levels based on the Square of 9's geometry. Start by taking the square root of the March 12 low 788.9, then add the factor for 180 degrees from the degrees factor table. Square the result to get the next price level. Repeat this process for several cycles: 180 degrees, 360 degrees, 540 degrees, and 720 degrees. Mark these levels on your chart to create the horizontal grid. See the actual numbers. Starting from the March 12 low of 788.9, the calculated price levels for each 180-degree rotation are as follows: 846.07 for 180 degrees, 905.25 for 360 degrees, 966.42 for 540 degrees, and 1029.6 for 720 degree. Draw horizontal lines at these price points on your chart. These levels often act as support or resistance, helping you anticipate where price might react in the future. Next, let's add the vertical grid lines, which represent the time element in the roadmap. Take the square root of the starting price 788.9, which gives you 28.08 rounded to 28. Using a ruler or compass, mark off 28 bars from the last high-low price bar on your chart and draw a vertical line at that position. Repeat this process one or two more times to complete the vertical grid. This step helps map out likely timing for key market moves. Both horizontal and vertical grid lines in place, your chart now maps out likely key support and resistance prices for the SPX upswing from the March 12 low. This grid forms the foundation of the Square of 9 roadmap chart, providing a visual structure for analyzing price action. But we're not done yet. Next, we'll add the channel lines that define the trend boundaries. Channel lines are essential for visualizing the trend within the Square of 9 roadmap chart. Start by drawing a straight line from the starting point, 788.9, through the intersection of the first 180-degree horizontal line, 846, and the first 28-unit vertical line. Extend this line upward at the same angle through the other 180-degree intersections. Repeat the process for the middle and upper channel lines starting from higher intersections. These channels help you see the boundaries within which price is likely to move. Even more detail, you can add horizontal grid lines at the 90-degree price levels. These are calculated using a factor of 0.5 and its multiples, or simply by splitting the difference between the 180-degree lines. The 90-degree angle and its multiples, 180, 270, 360, are especially important in the stock market, as many swings and pullbacks stop at these angles. Including these lines enhances the accuracy of your roadmap chart. I focus on 90-degree and 180-degree angles. These angles are crucial because market swings often react at these points. For the SPX chart, a 180-degree angle factor of 1 worked best for the swing starting March 12, 2002. By aligning your chart with these angles, you can anticipate where price may encounter support or resistance, making your analysis more precise and actionable. Square of 9 roadmap chart isn't limited to daily data. You can apply the same principles to hourly charts, as shown in Chart 2, a DJX chart from May 2003. Here, the chart was constructed with 45-degree angles factor of 0.25. This flexibility allows you to analyze any ticker and any time frame from minutes to years using the same geometric logic. Chart 2 was created in real time on May 16, 2003, before many price bars had even formed. The suspected pivot at 87.42 was believed to be a significant turning point. As price action unfolded, the bounce off the 84.49 horizontal line confirmed expectations. This level was 90 degrees down from the pivot high. Such reactions at 90-degree angles are common and can be anticipated using the square of 9. Another interesting observation is that countertrend moves often start or end at the midpoints of price and time squares. In Chart 2, the bounce occurred at a square's midpoint, reinforcing the idea that these geometric relationships are more than just coincidence. While not as critical as the 90-degree lines, midpoints still offer valuable clues for anticipating market behavior. Key signal in the square of 9 roadmap chart is the penetration of the upper channel bound. In Chart 2, when price closed above the upper channel for 2 consecutive hours, it was a clear sign to close short positions and construct a new roadmap chart from the next pivot low. This self-confirming feature helps traders stay aligned with the prevailing trend. After the downtrend was invalidated, a new square of 9 roadmap chart was started from the May 20 pivot low. This adaptability is a major advantage of the roadmap approach. You can quickly reconstruct channels and grids as new pivots emerge, ensuring your analysis stays relevant and responsive to changing market conditions. Chart 3 demonstrates the value of the square of 9 roadmap chart as a trading tool. If you were long from the May 20 low, you could remain confident as long as price stayed above the lower channel bound. Reactions within the 45-degree squares were normal and expected, providing reassurance that the trend was intact. This visual feedback is invaluable for managing trades. Outer diagonal channel line often serves as the most reliable price target. When price approaches this line, it's likely to encounter resistance in an uptrend or support in a downtrend. The horizontal price lines also play a role, frequently acting as barriers or support zones during ongoing moves. Watching how price interacts with these boundaries can help you set realistic targets and stops. One of the most intriguing aspects of the square of 9 roadmap chart is how price often vibrates within a square while trending along the channel lines. This vibration reflects the natural ebb and flow of market movements, contained within the geometric structure of the chart. Recognizing these patterns can help you anticipate when a trend might pause or reverse. Real power of the square of 9 roadmap chart comes when you start using time to forecast price or price to forecast time. By aligning these two dimensions, you can make more informed predictions about where and when significant market moves might occur. This dual forecasting ability sets the square of 9 apart from many other technical tools. All the examples we've discussed so far use daily or hourly charts, but the square of 9 roadmap chart is versatile. You can apply it to any ticker and any time frame, from intraday to multi-year charts. The construction principles remain the same, making this tool adaptable to your preferred trading style and market. Get the most out of your roadmap chart, you'll need to experiment with different factors to find the ones that best contain price movement for your chosen swing and time frame. Persistence is key here. Sometimes, you may also need to use a 3-digit conversion for natural prices, especially for certain tickers. Don't be afraid to tweak and adjust until you find what works. Let's revisit our SPX example. By applying the square of 9 roadmap chart to the daily bars from November 2002 to May 2003, we identified key support and resistance levels, mapped out likely timing for moves, and defined trend channels. This practical application shows how Gann's methods can be used to analyze real market data and make informed trading decisions. Similarly, the DJX hourly charts from May 2003 illustrate how the square of 9 roadmap chart adapts to shorter time frames. By constructing channels and grid lines based on 45-degree angles, traders could anticipate reactions and adjust their strategies as new pivots emerged. This adaptability is a hallmark of the square of 9 approach. One of the most valuable features of the square of 9 roadmap chart is its self-confirming nature. As long as price remains above the lower channel in an uptrend or below the upper channel in a downtrend, the trend is considered intact. This visual confirmation helps traders stay on the right side of the market and avoid premature exits. Markets are dynamic, and the square of 9 roadmap chart allows you to adjust quickly as new information emerges. When a channel is broken, simply reconstruct the chart from the latest pivot. This flexibility ensures your analysis remains relevant and responsive, helping you navigate changing market conditions with confidence. Square of 9 roadmap chart isn't limited to stocks or indices. You can apply it to any market, commodities, forex, cryptocurrencies, and more. The geometric principles remain the same, making this a universal tool for technical analysis. Experiment with different factors and time frames to find what works best for your chosen market. Mastering the square of 9 roadmap chart takes practice and persistence. Don't be discouraged if your first attempts don't perfectly contain price action. With time, you'll develop an intuitive sense for which factors and angles work best for different markets and time frames. The effort is well worth it for the insights and confidence this tool can provide. In upcoming chapters, you'll learn even more advanced techniques such as squaring price with time and using time to forecast price moves. The Square of 9 roadmap chart is just the beginning. There's a whole world of Gann analysis waiting to be explored. Stay tuned as we continue to unlock the secrets of market geometry. Wrap up, the Square of 9 roadmap chart offers a powerful geometric approach to market analysis. By combining price and time, drawing grid lines and channels, and adapting to new pivots, you can gain a deeper understanding of market structure and improve your trading decisions. Remember, practice and experimentation are key. With these tools, you're well on your way to mastering Gann's legendary methods.